Um, to start off, I'd like to again introduce Mr. Voltaire Lepe, the CEO and owner of Lepe Tendwell Properties, the broker. He's going to give us a quick introduction. Voltaire, how you doing today, man?
I'm good, Raul. How are you?
I'm doing good. I'm excited. I'm excited. A lot of good stuff we're going to talk about today.
Yes, sir. I'm excited too. And I'm really excited about this class because really this is a foundation class on how not only to get your first property, but as we all know, you create wealth through real estate and it always starts with your first property. So today we're all going to teach you guys exactly how to do that. So two things before we get started that I just wanted to teach you guys and talk about. The first thing is in order to buy your first home and therefore create wealth and buy more homes afterwards in real estate is you have to be aware. You have to be aware of how everything works. Okay. So you're in the perfect class for that. And awareness is key because most people go through lives, they're not aware of that there's rules, that it's actually a game that you're in and you got to know how to play the game. So when it comes to awareness, you have to be aware that you are paying a mortgage right now, whether you know it or not. You call it rent, but your landlord calls it a mortgage. So you're paying your landlord's mortgage right now if you don't own a home. So we just have to understand that, be aware that we are paying a mortgage and time flies, right? So you say, okay, I'm renting, but it's only going to be for a little bit. You open up your eyes, 5 years, 10 years pass, and now you just paid down 5 or 10 years of your landlord's mortgage. Some of you guys a lot more than that. So we have to be aware of that first thing, okay? The second thing I'm gonna share with you is just a tale of two young realtors that I know. These two young realtors, they're both under 30. I known them for about at the same time, about the last 4 years in 2018, okay? So they reached out to me for coaching, mentoring, and one guy is way smarter than the other guy. One guy knows a lot. I just got off the phone with him. This guy is so smart. He's teaching me about, tax deductions through cost segregation studies and all these advanced techniques when it comes to real estate. Really bright guy and loves real estate. The second guy isn't as bright, right? Now, the tale of two young real estate professionals is this. The really smart guy knows everything in the world, but he doesn't own any real estate. The other kid, I call them kids because they're younger than me and I coach them and they look up to me. He owns 2 pieces of property and he's an escrow to buy his third, okay? And all this happened, he's gonna own 3 pieces of real estate, all in San Diego, all single, a duplex and 2 single family homes, all within 15 months span. 15 wow. Months, okay? So the difference is this. This is a class you could jump on and learn and educate yourself and be aware and learn what you need to do. But it's worthless if there's no action taken, okay? So over the last few years, I've mentored both of them, coached both of them. However, one took initiative, took action, and the first really 2.5 years was just prepping himself, taking action on what he needed to do to get ready to buy. And then he ended up taking action. And then the second guy's still prepping himself. But he knows more than me on several topics when it comes to investment real estate. Okay. So you don't need to know everything, guys. You just need some good players on your team, someone like Raul and Claudia and Alfonso and myself and Juan and Gio and the rest of Lepe Tendwell Properties, right? Any agent at Lepe Tendwell Properties, you need someone on your team that knows more than you and just guides you. You just have to be willing to take action and take the steps forward, okay? Because if you just keep getting education, it's worthless if you don't take action. So that's my 2 tales of 2 different agents. And that's the first thing I mentioned is be aware that you are in a game and you're paying someone's mortgage. You just got to stop that and start paying your own mortgage. So that's what I want to share with you guys. You guys are going to learn a lot. You guys are going to have a great time. If you have any questions, reach out to your favorite Lepe Tendwell real estate agent and they can answer the questions after this. But during this, feel free to raise your hand, unmute yourself, and send some messages to Claudia and Raul and Alfonso, and they'll go ahead and answer those questions for you. So I'll see you guys later. Enjoy your evening. We'll talk soon.
Awesome. Thank you, Voltaire. And so
My pleasure.
I'm sure you guys noticed that the name of the event is 3 things you should know prior to buying your next house, right? So let's make this a little interesting. So we're going to just drop the 3 things throughout the workshop. So at the end of the workshop, you're going to know, okay, these are the 3 things I need to know. If at the very end, we'll come back and we'll ask you guys, hey, who can tell us the 3 things that we recommend you should know prior to buying your next house? And the first person throw it in the chat, the 3 things, I'll send them a $10 Starbucks gift card for knowing what 3 things you got to do. So pay attention, take some notes. We're going to talk about some good stuff. So here's thing number 1. The first thing that you need to understand, and your professionals definitely should understand this, is the market, understanding the market, right? So market knowledge. So what kind of market are we in? What is it going to take for you to actually dive in? So here is the monthly housing report that we do here at Lepe Tendwell Properties. Can you all see this good, or should I blow this up a little bit?
I could see it okay. Maybe just blowing up a little bit.
Yeah, a little bit more, please.
All right.
I think that's perfect.
Sounds good. So market shifts, affordability challenges. So a lot of us have noticed the first thing that we've noticed is gas, right? Especially as a realtor, we're driving around town all day, every day. So we're definitely noticing the gas prices going up. And so in May 2021, the average cost of gas, a gallon of gas, was about $4.07, right? And then we saw in January, it went up to $4.59, and then it climbed to $5.66. And now we're over $6 a gallon, right? So we've seen a jump of about $1.58 in gas. And the same thing with gas is going on with rates. We're seeing rates go from the low 3s, and now, and Alfonso, correct me if I'm wrong, but we're right around 5.25, 5.5, right? So we're seeing a drastic increase with the rates, right? And so you're probably asking yourself, well, how does that correlate? Well, I'll tell you this. If somebody asked me when gas first jumped to $5, I don't know about you guys, but I was like, what is happening with gas right now? But if I was like, this is crazy, I can't wait for gas to go back down to $4. But if somebody asked me now, hey, Raul, would you lock in $5 a gallon on gas for the next 30 years? I would say yes, all day, every day. Matter of fact, I'll take it one step further. If you were to ask me, Raul, will you lock in gas at $6 a gallon right now for 30 years? I would say yes. And the reason why is because inflation, right? The price of costs and services, goods and services, they're just going to keep going up, right? So in 10 years or so, we're going to see the price of gas probably be $8 to $10 a gallon, right? And the same thing is kind of happening with the houses. You know, you have an opportunity right now to lock in interest rate with today's money for the next 30 years. So you get to buy a home, an asset that you control now with today's money, and pay it back with tomorrow's money. And I think we can all agree that tomorrow's money is going to be worth a little bit less than what today's money can buy. So today's dollar is going to stretch a lot further. So with that being said, if you have an opportunity to lock in an interest rate that is at a lower pace than inflation, you're actually making a good move right there. And again, you're locking that in for the next 30 years. So let's not sleep on that one. And just to give you an idea, because I'm a visual learner, I like to see numbers, right? So as an example, a person buying $1 million home, right, with 10% down, your payment when rates were about 3.25, which was right around January, right? Your payment was right around $3,900. Today, at 5.25, that payment is now $4,900. So a little bit more than $1,000 a month. The same person that's buying that $1 million house, the person today is paying $1,000 more than the person back in January, right? So what that means is that a buyer in today's market lost about $200,000 in purchasing power. So the longer that we're waiting, we're letting inflation kind of do its thing and just kind of push us back on the market, you know? So I think we can all agree $1 million house is going to offer a lot more than an $800,000 home, right? So with that being said, don't cheat yourself by waiting. And like Voltaire mentioned, do you want to pay your mortgage or do you want to pay your landlord's, right? Because at the end of the day, he's right. We're all paying somebody's mortgage. We just got to understand who's we're paying, right? So a little bit about the active listings. So a lot of people, I'm sure, have heard that there's no inventory and that people are just in a bidding war, tripping on themselves trying to get a house. And so we've actually seen an increase in inventory. So we're sitting right around 2,900 homes on the market. But just to give you all an idea, this time of year in a regular market, we're at right around 6,000 homes. So we're at 50% of our inventory goes to where we're normally supposed to be at. But with the low inventory and that high, with the rates going up a little bit higher, we are seeing the market cool down a little bit. So instead of people offering $60,000, $70,000 plus one of their kids to get a house, now you're able to get away with, hey, let me give you an offer right at asking, or maybe negotiate a little bit closer to asking. Now you're not having to give up so much to get your house. But nonetheless, inventory is still very, very low compared to this time of year. With that being said, demand is also dropping. So demand decreased from 2651 to 2611, not the hugest decrease, but we are seeing that it's trending, that we're seeing less and less buyers here on this market. And one thing that we're noticing is a lot of the buyers, one of the common trends is they're saying, oh, well, the rates. And I'll let Alfonso talk a little bit more about the rates. But again, I'll stick to my analogy of the gas. You know, somebody asked me to lock it in at $6 a gallon now for the next 30 years. I'm saying yes. So if anybody knows anybody with the gas station that has that offer, let me know. So with that being said, we'll go down over here. This is another one of my favorite stats right here. So the average sale price in San Diego is over 1.1 million. The average list price in San Diego is a little bit over $1 million, right? So with that being said, for there to be some sort of a market crash, we need to see a lot of homes hit the market. Back when the last market crash in the housing crisis back in the day, we had over 16,000 homes on the market, and over 8,000 of those homes were people in distress going through a foreclosure or short sale situation. Today, we have, 15 people in a foreclosure situation and 2 people in a short sale situation. So 17 people in San Diego County, a county of 3 million people, only 17 people are in trouble right now. Now, with that being said, again, for the market to really crash, in our opinion, we're going to need, again, anywhere between 8,000 to 10,000 homes to hit the market. And for us to say, so we're cognizant of that, right? So now we're saying, okay, where are these homes coming from? People are not in distress, right? 99% of homeowners right now have some sort of equity. So if something were to happen, they can sell and keep it pushing. There's really almost nobody in a foreclosure or short sale situation. So we really don't see where this new inventory is coming, which leads me to my next point. On average, between 2019 and 2020, we've seen about 6,600 new built homes on an annual basis being built. And we compare that to 2005 and 2006, there were over 16,000 new homes being built. I'm sure you've driven around town and you see a lot of new communities being built, Chula Vista, Otay Ranch, places like that. But again, a lot of developers, they got scared from that last market crash. A lot of developers, unfortunately, lost a lot, if not everything back in that time. So with that being said, developers are being a lot more conservative. And now this number is not even 35,000 housing units in San Diego. Now San Diego County is short 125,000 housing units. That means that if there was 125,000 new homes all of a sudden just pop up on the market, 125 families would go and they would just buy a house or move into a house because they need that, meaning they're living with mom and dad because there's no houses available, or maybe the prices of the houses are getting a little bit out of hand, whatever it may be. Nonetheless, San Diego County is short 125,000 housing units, which is pretty crazy if you kind of think about that. What questions does anybody have, if any, so
I see some questions there, Raul. It says, Christian Acosta is asking, are sellers overpricing their homes right now? Is it reasonable to negotiate way below they're asking? Should we wait to see the impact on, on this rate spike?
Yeah, so are sellers overpricing their homes right now? I think right now, a common trend that we're noticing is sellers are definitely testing the waters. They're definitely understanding that we're at the end of this we're still in the seller's market, right? But anything less than 60 days on the market is a hot seller's market. And right now, I want to say houses are lasting about 20 days on the market. So with that being said, sellers are definitely testing the waters and trying to get the most bang for their buck. Now, typically, when a real estate agent like myself or even an appraiser analyzes a property, we're running comps. And what does that mean? That means that we're looking in your neighborhood, going back 6 months and seeing what properties like that have sold for. And prices 6 months ago are going to be a lot more generous than they were today, because 6 months ago we were seeing rates in the low 3%. So I don't know if they're overpricing it, but they're definitely testing the waters. And is it reasonable to negotiate way below their asking? it's definitely reasonable to negotiate below asking. Now, some things that we got to take into consideration. Now, it's always case by case, right? Depending on the type of activity and how they price the property, because some agents do understand that there has been a market shift and they're pricing the properties accordingly. Now, for the sellers that are testing the waters and trying to, I guess, overprice their property and seeing if somebody falls for it, right? Yeah, let's definitely. We always run that analysis. We see what properties are selling for, and we always negotiate with the agent and we see, hey, how long has this property been on the market? Are you getting any activity? Do you have any offers? And if the property's been on there for 3-4 weeks, they have no offers. Yeah, we're definitely going to try to negotiate way below their asking point. And should we wait to see the impact on this rate spike? Alfonso, correct me if I'm wrong, but my understanding is that rates are going to keep going up throughout the end of the year. And we've told a lot of our investment clients, because we have a lot of clients that are looking for investment opportunities, 2 to 4 multifamily units, duplex, triplex properties, right? And we've called them and we say, hey, with the rates going up and the prices still being very aggressive, we recommend that you wait about 6 to 8 months and kind of see what's happening with the investment side of things. And Voltaire himself, he's an active investor in the market, and he himself said, hey, I'm going to kick back and I'm just not going to buy for the next 6 months. I'm going to see what's going to happen. We foresee that the 2 to 4 unit market is going to adjust accordingly, because those are primarily investors. Now, if you are currently renting and you're looking to purchase your owner occupied property, it still makes sense for you to purchase something, simply because, again, you're going to pay somebody's mortgage. It's either going to be yours or your landlord's. And there's really no right time to jump in the market. It's how long you've been in the market. So the sooner you can get into the market and take advantage of your appreciation and principal pay down, your monthly payments, bringing that balance down, that difference right there is going to be your equity, and that's going to serve you in the long run. So to answer your question about waiting, if you're looking for an investment opportunity, it's going to be kind of tough. We may want to see what happens in the next 6 months, but if you're renting right now and you're looking to occupy the property, I don't recommend waiting, because, again, you're just going to pay somebody else's mortgage in the time that you're waiting.
Yeah, and also if I can address that question, the whole overall question with you, Raul, if you allow me, is,
definitely.
I agree with you, Raul, 1000%. I think sellers are testing the waters. I do think the properties are not being so much overpriced. Whatever I do think, though, is that, sellers have the ability to sell no matter what, because what you said early on, Raul, is there's a lot of equity out there, right? So, hey, if they're looking to upsize or downsize, or, hey, you know what? I know Raul or your Lepe Tendwell property realtor said, hey, you're gonna make $200,000, right? But let's say the property pops up that they absolutely love. Hey, they can afford to sell it for more. It's not that the property is not worth whatever they were asking, is they're just willing to take less because they want to make that next move, and they can afford to do it without losing the money, like literally losing. They're just not going to make as much, but maybe they're not also going to pay us much in this market, because everybody's testing the water. So because the simple fact that there's so much equity in 2020, right? There was almost 20%, like 19.8 appreciation in San Diego County. 2021 was 22.89, almost 22% of appreciation in San Diego, right? And if we put that in perspective, the house that someone bought, Raul, for $500,000 in 2020, today's dollars is worth what? 750? So
Right around there.
$250,000 of equity in 2 years of this real estate boom, right? So they can afford to sell for more. But once those sales, Raul, which you agree with, Claudia, that once those properties that maybe are worth 750, but the seller is like, you know what? I'll take 725. Once those sales go down, that just will start to set the new prices for those neighborhoods. It'll stabilize a new comparable lower than it was listed. It wasn't that it wasn't listed for, it wasn't worth 750. It's just they were flexible on their net price to move on to the next chapter of their life. And like Raul said, I do agree. A lot of investors, I'm a real estate investor, we've pumped the brakes. Like, it's not an obligation for us to go buy a property, but what it is an obligation, like Raul said, is to have a roof over our family's heads, right? And you're paying a mortgage, it's just not yours, it's your landlord. So if you're looking to buy because you're renting, never time the market, rather to be in the market. So I just want to add those 5 cents to that.
Yeah, no, I appreciate you adding that information. Yeah, no, I agree with everything you just said. So let's see here. So as a real estate agent, we have a fiduciary duty to our clients, whether it's a seller's agent or a buyer's agent, right? And that's why people get an agent, right? You want somebody who understands the market, understands the intricacies of buying or selling, and you want them to act in your best interest. And as an agent, that's by law, we got to have your best interest at heart, right? And so I already went over the first thing that you should know as a buyer if you're about to get into the market. The second thing that you should really get to understand before you start shopping and going on Zillow and driving the neighborhoods and looking for sale signs, the first thing you need to do is you need to get approved. You need to go start shopping for a home loan. And Alfonso, I couldn't be happier that you're here, my man. Go ahead and take it away. Tell us what we got to do to get approved here.
Absolutely, man. If you, well, the first step is the hardest part of buying a home. I always say it and I mean it sincerely, is the hardest part is picking up the phone. Because, if you call any Lepe Tendwell property realtor, you call myself, we're going to guide you. Okay. So, I always use the analogy to tell people, it's like, listen, I had a short sale. I'm not embarrassed of it. I've had credit score of 480, I think was the lowest I was ever at. Right. I had a bunch of IRS debt too. Nobody taught me how to manage money back in the day. I was young, made some wrong decisions, and I dug myself out of that, right? By leaning myself on professionals like the Lepe Tendwell property family. So the hardest part of buying a home literally is picking up the phone. We're going to give you a consultation. We're not going to judge you. We've been doing this for a very, very long time. I think if you put all the Lepe Tendwell property agents experience with my 18 years of experience, I think we accumulate over almost probably 100 years of experience in the mortgage and the real estate business, right? Industry, sorry, that we're going to guide you. So make the phone call. That's the first step. And, I'm going to walk you right now through, I believe, the documents that you got to start to gather. Okay. So I like to call this the 222 law, right? Because it's super simple to remember. However, I do recommend if you're watching us on Facebook, on your phone, on Instagram, whatever you're watching, take a quick screenshot of this slide. These are the documents that you need to gather if you want to know if you're eligible or approved to get a home loan. Okay. So number one, 2 years of your federal tax returns. Okay. Now, if you own a business and you have like a corporation or a partnership, an LLC, we will need your personal and your business returns, okay? So this is 2020 and 2021 tax returns. I will also need 2 years of your W-2s and or 1099s. If you get a 1099, for example, Raul, Claudia, Voltaire, whenever they're realtors, they get a 1099 every year. Say, hey, here's your commissions. Is what you make. They're also considered self-employed because they get a 1099. They're contract employees, right? So you need your 2 years of W-2s and 1099s. Once again, 2020, 2021. You need 2 recent pay stubs. Most people get paid every other week, so twice a month. Give me 1 30-day worth of pay stubs. If you get weekly pay stubs, give me 4 pay stubs. Pay stubs that cover the most recent 30 days. Okay. I will also need, or the banks will need, 2 most recent months of your bank statements. Even though we could probably get you with a down payment assistance program, or where you come in with little to no money, the bank needs to verify that your money that you're contributing to the purchase of your house, it is seasoned in the bank. It's been sitting there for 30 to 60 days. Okay, and if it says that, we have to explain it. We need 2 forms of ID, right? Your social security card, your driver license, your passport. If you are a U.S. permanent resident alien or a resident alien, we need your permit, your green card, right? Also, DACA recipients, you guys are eligible. You guys are eligible for those programs to buy a house as well. Even ITN numbers. We're not going to cover that today, but we have programs for people that have the tax ID numbers. So we need that. And then, if you have any of the following, like a 401k, IRA, if you have them, you know what I'm talking about. These are retirement pension accounts that you've set with your employer or with a private financial advisor, mutual funds, stocks, bonds. We will need those only if you're using or depleting some of that money to buy the house. It's always good to show the bank, hey, I don't have the bare minimum to buy a house. I have a little savings cushion. It's always good to disclose that as well, right? And then if you already own some real estate properties, okay, like Voltaire, like myself, we have multiple properties, and as real estate investors, you will need your most recent mortgage. Like Claudio has a mortgage too, right? So, Raul, everybody that owns a real estate already, we need your most recent mortgage statement, your home insurance. If you have real estate that you are leasing, that you rent out, we need those lease agreements, right? But for the most part, a lot of first-time home buyers don't have that, so we're gonna need everything in the above. So 2 years of taxes W-2s, 2 pay stubs, 2 bank statements, 2 forms of ID, and that is the most important information that you need to start gathering if you have the barest minimum interest of buying a home one day, okay? So that's the most important list of documents that you gotta gather, and once again, make the phone call because the process is 100% free. We do not charge for the consultation. If anything, you're gonna walk out of there with a plan or with a pre-approval and a copy of your free credit report. Okay, next slide, what do we got there? Okay, so meet with the lender and get pre-approved. We will review all of your finances, right? Like I like to call it, like I'll do a financial x-ray, right? So I'll have an x-ray, I'll pull your credit, I'll ask a bunch of questions. You can ask me all your questions. We'll review your bank statements. I'm gonna review your credit report and your credit scores with you, right? And then based on all that information, we're gonna determine and we're gonna calculate the most important part of the loan, your debt to income ratio. What is debt to income ratio, right? Well, let me tell you something. Credit scores or credit, it's about 20% or 25% of the equation of you buying a home. The 70 or 75% of the equation of you getting approved is based on your debt to income ratio. Well, let me explain to you guys real quick what debt to income ratio. We don't care how much debt you have balances on. What the banks are going to consider is not the $50,000 car loan. They're going to look at the $600 monthly payment, car payment. So we're going to take all the minimum payments that we only reporting your credit report. We're not looking at SDG&E, your cable bill, your cell phone, your auto insurance. We don't look at that. We just look at whatever is reported on your credit report, like credit card minimum payments, car loans, personal loans, student loans. We're going to look at those and we're going to add them up, right? And then you take your full mortgage payment, whatever that payment ends up for whatever you want to buy, add them up, and then we divide them by your gross monthly income. We do not go off your net. It only go off your net income after expenses if you're self-employed, okay? But if you get paid 20 bucks an hour, it's 20 bucks an hour times 40 hours a week, that's the income. So we add up all the household income and we give monthly income divided by your monthly obligations, and that's how we come up. And that is what the banks determine how much we will lend you, okay? Different programs have different limits. So down payment assistance, typically, they'll cap you at 45% of your income. Conventional, 50% of your monthly income. FHA, 57% of your monthly income. VA, I've done VA loans up to 60 or 70% of your monthly gross income, okay? So we're gonna calculate that, we're gonna go over it. The only debt that we consider, like I said here, is your monthly payments. If you are approved, you will be provided with your loan options. I always like to provide more than one. And if there is ever not more than one, I will explain why. The last thing that Claudia, Volterra, any Lepe property realtor, we want you to do is walk and leave my office and bump into another lender or another realtor and they talk about something that we didn't talk to, right? It can happen, but we want to minimize that. So we're always going to give you multiple options. And if there's not multiple options, we'll tell you what those options could have been, but why you don't qualify for them, because the more informed you are, the better decision and the more comfortable you feel with moving with the process, okay? And if you're not approved, this is it. It's okay. You're gonna leave with homework. I like to call it homework, right? And we're gonna give you a pretty detailed step-by-step plan on what you need to do in order to become a homeowner. Listen, the craziest story I could have for you guys real quick, if I'm allowed. I met a family in January of 2010, okay? It is the biggest credit report I have ever seen, even over mine, okay? I'm not kidding. It was like 200 pages of just stuff on there that had accumulated over the years. I sat down with them. They had been turned away by several other realtors, by several other lenders. Nobody really gave them the time of the day. Well, we took the time. We spent 2 hours in the consultation. I gave them a copy of the credit report and I literally highlighted everything and what they had to do, where they had to call. Literally that same year, December 18th of 2010, they got the keys to their home. So I always use that family as a reference. We really, I don't care how bad your situation could be. I don't care how bad your credit could be. If you have the will to own a home, you can become a homeowner in the next 6 to 12 months, because if that family did it, you can do it yourself. So we're never going to tell you no. We're just going to be like, let's pump the brakes a little bit, pause. Here's your homework. You're going to walk away with a very clear plan on what you need to do in order for one of our Lepe Tendwell property realtors to get you in the home in the next 6 to 12 months, guys. Cool. Let's talk real quick on some of these. We're doing good on time, guys. Yeah. Different programs. Okay. These are the foundation, like they said today. This is the foundation of how to become a homeowner. We'll tell you what, this is the foundation programs that most buyers are using out there. So number one program on there is the FHA. I'm going to break a myth. I'm sorry right now. Most people still to this day believe that FHA is only for first-time home buyers. Well, let me get you some good news. Anybody can buy with an FHA as long as you're going to occupy that property. And yes, you cannot have 2 FHAs. You could have had one in the past, but as long as you either refinance it into conventional or you sold it, you can redo FHA again. It was designed for first-time home buyers because it only requires 3.5% down payment. It allows you to spend up to 56.99% of your monthly gross income. We can do FHA loans, believe it or not, down to 540 credit score. However, you do have to put 10% down. If you only want to put 3.5, all we require is 580 or better. Okay, it is only for primary residents. You can also have a co-signer, and also a co-signer that's not going to live in the property with you, like your mom, your dad, your uncle, your auntie, your grandparents, right? It allows for a co-signer, right? That's a non-occupant. All money is required to be gifted. So let's say you have a grandparents, right, or your parents, and they want to give you all the money needed to buy a house as a gift. It allows for it. And here's a good part. Voltaire, Raul, Clyde, and I have helped a lot of people make their first purchase a multi-unit property, meaning they're living in one, renting the second or the third or even the fourth unit, right? As long as you live in one, you can rent the others, and that rental income, 75% of that monthly gross income that a property will generate, it gets added in your application as income to help you qualify. That is super crazy. There's people that are clients that we've helped with the Lepe Tendwell family that are living in one of the units for less than $2,000 a month, and they have 3 or 4 units. So we can make that happen for you as well. Okay. So the next program is for VA, the veterans, active duty military, or people that have been in the service that were honorable discharge. Okay. This is the best program on the planet. Don't look any further. If you were active duty or are active duty, you guys can get a home with no limits. As long as your income allows you, your debt to income ratio, you can do 100% financing. Right now in my company, Point Mortgage, we're doing one of the biggest VA loans here in San Diego County history. I looked it up. We're doing a VA loan right now for $3.9 million. The reason we're doing that is because the limit got lifted in the January of 2020. So now you can buy as much as you can afford. And it has allowed for 60% or higher of your debt to income ratio. All you need is 540, 100% financing, 540 credit score. All right. It is a primary residence. You have to live in the property or in one of the 4 units you buy, or the 3 or the 2 units, right? It has no private mortgage insurance, no loan limits, buy as much as you can qualify. You can have a non-veteran or non-VA co-borrower. You will have to put a down payment. That's a case by case of how much you have to put down. Okay. And this is like, let's say you have a brother, cousin, uncle, or yourself. You joined the military. You just joined. As long as you're joined and you're in the military for 6 months and a day, which is 181 days, you are eligible. Let's say you get in and they send you on a mission, 90 days active duty on a mission, you are eligible to buy your house with 100% financing, no money down. Okay. So once again, you can use your VA loan multiple times. So if you have one, you get another one, you get another one. Okay. So you can reuse that VA multiple times. The third program we have here is a conventional. This is the first loan ever invented in America, in the US, how they finance homes. And yes, back in the day, when they first came out, you needed 20%. Well, let me tell you something. today's world, 2022, as long as you're a first-time home buyer. Now, who's a first-time home buyer? Someone that has never obviously bought a home before, or never you've been on title of a property. Be careful. I've also had cases where the parents added children to a title that you're not a first-time home buyer because your name's on title. Now, or if you owned a home, but you haven't owned a home, or your name has not been on title for 3 years and 1 day, you are reconsidered a first-time home buyer. And what that does for you is you can buy with as little as 3% down. Okay, 3% down. If you're not a first-time home buyer, but you are going to live in the property, 5% down is required. If you're buying as an investor, one unit, which is a condo, townhome, or single-family home, you can do it with those 15%. Like Raul said, most investors are just pumping their brakes right now. They're waiting to see what really happens in the market. And they're investors. They're timing. They want to get a good deal, right? So, and they can afford to do that. So that's what they're doing. It does allow you to have a minimum 620 credit score, although other banks may require higher credit scores. Here at Point Mortgage, we only require 620 points. Your debt to income ratio, we can cap you at, they'll cap you at 50%. It also allows for non-occupant co-borrowers. And also this program is ideal for townhomes and condos, because if the condo or townhome you're trying to buy is not FHA or VA approved, we can do it. However, there's loopholes around it. We're doing it right now with one of our clients. It wasn't FHA approved. The property qualified. Raul and Claudia and Voltaire and all your Lepe Tendwell property realtors know exactly how to do this process. We've done it over and over, where if something's not FHA approved, we got you. We'll get it FHA approved. If that's the only option, that's your best option, that's what makes more financial sense for your family, we're going to go the extra mile, and we're going to get that complex or that specific unit FHA approved for you, so you can still buy with FHA or even VA. Okay, so this is the baseline programs. We do have other ones I'm going to talk very quickly. I don't want to overwhelm you with this information, but let's say we have some investors. Yeah.
There's a couple questions on the chat. I wanted to see if
let's go. Before we go on, let's answer those questions.
For sure. Let me go back. There's first one is, how long has FHA loan been around?
Ooh, FHA, if I recall correctly, was 19. It was I don't want to give you a wrong answer. It's in the 80s. FHA has been around for a very, very, very long time. It's a loan that is backed up by the federal government. So FHA will be insured by the federal government. So it's been around for many, many, many years.
Next one is, what are the conventional loan limits in California?
Well, it all depends by the county. Okay, so right now here in San Diego, it's 942, 250. Riverside, they'll cap you at the mid 600s. Orange County is almost $1 million. LA County, it's over $1 million. So conventional loan limits, it's gonna be depending on the county that you're buying. Okay, once you go over the limits, you go into what's called the jumbo space. So every county is gonna be different. So once again, give us a phone call. We'll let you know what county you're trying to buy, what that limit's gonna be.
And there was a follow-up to that one as well. Does that mean I have to come in with the difference? Let's say if the house is worth 1 million in order to qualify?
Yeah, I mean, like I said, here in San Diego, anything over 940 to 250 that you want to qualify for, yes, you're going to have to come up with a difference, or you put more money down, or we have other options. I mean, we can get very creative. I could do an 80-10-10, an 80-10, an 80-10-5. So where I can give you put 5% down, I get you a line of credit for the rest, and then you finance 80%. So we can get very, very creative with financing, and like I said, like I was telling Raul when you guys first got it, it's like we're actually retraining ourselves and learning back to basics again, because some of the programs that kind of went away because there was no need for that market, right? Like FHA, like when I first got in the mortgage business, FHA was not even, it was around, but wasn't used because there was other programs that did 100% financing, and FHA has always required a 3.5% financing. So, we weren't doing them before the mortgage crash, but after the mortgage crash, we had to relearn a lot of programs. So right now we're getting the old arsenal back out. We're polishing our skills on those things, and we're relearning the programs, but there's programs out there where you can buy $1 million house with 5% down, right? There's options, right? So it just depends on your situation.
Awesome.
Any more?
Thank
Yeah,
you.
and then there's another question. It says, for Navy, does mission qualify as routine deployment patrol, essentially non-combat deployment?
I'm sorry, repeat that one more time.
Because you mentioned something about like if you go on a mission, and then I think you
Yeah.
mentioned 90 days. So for a Navy, does the mission qualify as a routine deployment patrol,
No.
or does it have to be like, does non-combat deployment count
No, it
essentially?
has to be combat. Yeah. From what I know in the last manual that I got, what I learned is, let's say you get in the military and they send you on a combat mission 91 days technically, you are eligible for it, right? So it can't just be a regular just deployment out to sea. It has to be a combat deployment as long as you're out there. Yes. Now there is exceptions because typically you're being sent out into a mission. So we got to get a letter from the commanding officer. Depending what you're going out for, we could look at that and send it to the VA. At the end of the day, no matter what the lender says, who has the last calling is the VA, right? So we can always look at that.
That's awesome. Yeah, no, those were really great questions. Thank you,
Yeah.
everybody that's asking questions, and thank you, Alfonso, for answering.
Yeah, and
them.
actually, Christian Acosta, I know you're asking about the so yeah, so anything over the 879, I was using the 900 something that's the purchase price because once you put the minimum down payment, your financing cannot exceed the 879,750. So, but yeah, once again, there's different options. We have loans that go up to $1.5 million finance with only 5% down. It's different programs that we're going to talk about here in a second. Non-QM. So Claudia, if I can go to the non-QM space, just in case we have any investors, any people that say, hey, well, I can't qualify for those. I don't have the tax returns. There's other programs available. So the next slide is.
And real quick, Alfonso, before we go to the next slide, if I may, I just wanted to touch on something because I feel like this is very, very important, very crucial, is the debt to income ratios. You'll notice that FHA, VA, and conventional all have different debt to incomes, 56%, 60%, 50%. What that means is the higher the percentage, that means that you unlock more purchase power, right? So you can buy more of a house with an FHA going up to 56% debt to income ratio rather than the conventional capping you at 50%. So that's just one of the differences between the loan products that I think is very important to understand for sure.
Correct, absolutely. And most some lenders will have restrictions. We don't have it. We go what's called scorecard approval. So as long as the automated approval gives us a scorecard approval, says approve eligible, we're going to get you the loan. We follow that to the T. With veterans, a lot of mortgage companies, a lot of banks, cap people at 55% regardless of the automated approval. Like I'm telling you, I've got veterans approved, VA buyers at 69%, 70% debt to income ratio, because there's good compensating factors. So the higher the debt to income ratio, just like Raul said, the more buying power you're going to have.
For sure. Thank you, Alfonso. And I know we got a couple minutes. We definitely want to leave some time for a Q&A at the end as well. So next slide, I'll let you take it over, AD.
Yeah, real quick. I mean, we have like the medical professionals, right? Like right now, for example, Christian, if you know someone that's in that field, medical, it says right there who qualifies for this program. 100% financing up to $1 million loan amount, 95%, 5% down up to $1.5 million of loan amount. We have the investor cash flow. So as long as a property pays the mortgage, 15% down will get you that loan. We have a 40-year fixed loan program that for the first 10 years, you have the option of doing interest only. We have I don't like to use the stated income because it has a lot of bad rep from the mortgage meltdown, but it's back. It's called now the no ratio. That's what they call it right now. So literally no employment, no income verification, 640 credit score. You put 20% down, you can buy that home. We have the bank statement programs for business owners, right? So we can do that. We have the IT number. Like, this is awesome, good news. We just got a different investor that will do an ITN. This is people that literally don't have a residency. Like, they're here, they work, but they have no say pretty much. It's, I don't like to get into politics, but anyways, these are hardworking families that have a tax ID number. They pay their taxes. They're actually good savers. They got money, right? So 15% down, guys. 15% down, we can give you guys a loan for national loans, okay? We need a 680, or if you don't have a 680, no worries. We have options that we do a free credit report from your foreign country. You can do as little as 25% down up to 3 million. Over 3 million, they may require 30 to 35% down. But these are people that want to invest in the US, they're from foreign countries, they want to buy their vacation home or investments. We do those programs as well. And we have one more slide real quick. Net worth income, people that have a lot of money saved up in the portfolios, we leverage that income, that save those assets as income to help you. There's also restricted stock loans, right? We have some pledge asset loans where you put your portfolio in as a collateral. We have bridge loans, you know, a lot of stuff. People that have been self-employed for less than 2 years, we have those programs. We have mixed-use properties. There's more and more here in San Diego where, like in the front of the property, there's like a little, I don't know, a little tire shop, right, or a restaurant, and in the back there's a single-family home or multi-units. We can do those as well. 1099 only. Let's say you don't want to give me your tax returns, Raul, but you know, Voltaire give you a big fat 1099, right? And that's the income that we use. Whatever is on your 1099, we can do it, right? As little as 5 to 10% down, we do those loans. We do piggyback loans. Back in the day, once again, these loans have been around for a while. We're just going back out to the arsenals and putting all these loans back together because it's the market to leverage and help more families with that. We also do the super jumbo loan. Very many banks over 3 million don't want to lend. We do up to $30 million loan amounts. So if you really know a rich friend that doesn't want to use all his cash and he wants to buy a big fancy house, we can do up to 30 million. This is just some programs, guys, in order for you guys to know there's options there for you. And I know there's a lot out there, but we know how to do them and we do them very well, okay? Lastly, I'll let you guys meet my team. It's not a one-man show. I'm able to service a lot of families at a very high level because I run a team. All these individuals on this slide work on all of my clients' files. They help me structure them. They help me make appointments. They help me process the loan, close the loan. So, you know, you're going to get a good service if you give us an opportunity because I have a lot of team that backs me up. Claudia, Voltaire, Raul, and all of the Lepe Tendwell property realtors, okay? So thank you guys so much for letting me speak today. And
there's one more question.
One more.
Sir.
Let's go.
It says, what program would you recommend for self-employed people?
Love it. Great question. It all depends on your situation, right? If we can qualify, let's say you don't qualify with your tax returns, let's look at the if you have 20% down, let's look at the stated program, the no ratio. If you don't want to do that, let's look at a 10% down bank statement program, right? So every situation is going to be different. It's all going to be depending on how much money you want to invest. Once again, I could present you multiple options. You decide what makes more sense to you. I will always recommend one, but at the end of the day, you're going to pick the best option for you and your family.
Awesome. Yeah, thank you for going over that, Alfonso.
Yeah.
So just a couple more things before we wrap this up for you guys. So real quick, some of the costs that come with financing a home. So is the purchase price, whatever the house is worth. Then you have your down payment, which is anywhere between 0 and 30%. Alfonso covered most of that today. And then you have the interest. That's just the cost of borrowing money. And then you have your closing costs. So closing costs is separate from your down payment. And just to give you an idea, so you can kind of get a rough estimate of how much the budget for your closing costs, take 2% of the sale price of the house. So if you're buying a $500,000 house, your closing costs will be right around $10,000. How does that sound, Alfonso?
Right.
Cool.
Yeah.
And some of the things that your closing costs will pay is the escrow company, title company, any lender fees, real estate fees, notary fees, HOA fees, if any. And real quick, escrow company, that's just a neutral third-party company that helps facilitate the contract. Essentially, they just make sure that the buyer and the seller do what they said they were going to do within this purchase agreement. And they also hold the money to make sure that any deposits that are sent from the buyer to the seller, that the seller just doesn't run off with your money. So that's who escrow is. And the title company, that's just to make sure that when you do close on your transaction, that you have a clean title. And the last thing that you as a home buyer should at the very least have an idea of, and you don't have to know this like the back of your hand because you have your real estate partners guiding you through the process, but it's the escrow timeline. What happens from the moment that your offer gets accepted to the moment that you get your keys? Claudia, what happens?
Thank you, Raul. Hi, everyone. So the average escrow timeline, this is just a general idea of what happens when your offer gets accepted. So we'll start with day zero. Day zero is the day your offer got accepted, which means the seller and the buyer came into an agreement and the contract is fully executed. Within 3 days, you will have a earnest money deposit um, item to take care of. You have to submit that into escrow. Escrow is the one that holds the funds. And if I can backtrack a little, you're gonna have a third party company business, which is called escrow. Escrow is neutral to the seller and the buyer. So their job is for everything that the contract says happens. So that's why they hold the money for all parties, and it'll be submitted into escrow. So usually, typically, the earnest money deposit in this kind of market, we want it to be as big as possible. It is not an additional cost or fee from what Raul was explaining of your down payment and closing costs. It is, let's say, for example, you have to come in with 20,000 and you do a $5,000 deposit, then at the close of escrow, you'll come in with the remaining 15. So that is what the earnest money deposit. And within that same timeline, the seller now has 7 days to provide us with disclosures. In the state of California, the seller does get held accountable for what he discloses on the sale of their home. And the things that come with that can be as big as any debts in the property, or small as there's trolley noise, freeway noise, neighbor parties, hard weekends, that kind of information. So it varies, but it gives you a buyer the ability to do your diligence on disclosures on the property. And with that, you also have a home buyer, a home inspection report that you hire an inspector to come inspect the home to get a general idea of what you're buying. So the home inspection can run up to $550 depending on the size of the home. And then that would be an out-of-pocket expense. So if this home would not work for you and you were to cancel, you can cancel with your contingency right as a buyer, but you wouldn't get your expense of hiring that inspector. So the contingencies are your right to cancel as a buyer. And those contingencies are inspection contingency, loan contingency, appraisal, and depending the type of property, they can be more contingencies. But the way the contract is lined up is for you to do your diligence and your work on all those things you need to find out if this is the right home for you. And if it's not, then with those contingencies, you get to cancel and get your deposit back, and you lose any out-of-pocket expenses. So by then, by day 17, you'll most likely had already cleared all this work, or will help you through it. And then after that, you can remove all your contingencies. And by then, your loan docs should be ready in escrow for you to sign with the notary. The day of the closing, we'll meet you at the property and celebrate with you handing over keys. Any questions on the escrow timeline?
And by the way, you get a nice picture with Claudia and the team on Facebook and all that stuff, celebrating the keys.
Yeah. Or your favorite Lepe Tendwell agent, of course.
Exactly.
Yeah.
Yeah.
Exactly.
Yeah.
Sorry, guys. I keep only seeing Claudia and Raul, so I do apologize. There's a lot of great realtors at
It's
Lepe Tendwell Properties. You guys cannot go wrong.
Yes,
Yeah,
we
for
do
sure.
love celebrating key day, what we call key day, because sometimes there are hiccups through the transaction and might extend a day or two, but I swear to you that the day you get your keys, it all goes away, and it's so worth it.
Yeah, it'll all be worth it for
yeah.
sure. But yeah, I mean, essentially these contingencies, there's several different contingencies, is really just there to protect you as a buyer, to make sure that the property that you are buying, it gives you the opportunity to just make sure, hey, is this really the property for me, right? And if it's not, at any point within your contingency period, you have the right to cancel and get your deposit back. And like Claudia said, you just don't get back the money that you paid any inspectors for their service, right? Because they already provided their service. Some of the fees, again, your appraisal is going to be right around $600, give or take. Home inspections can be right around $550, depending on the size of the home. And we always recommend a termite inspection, and that's typically right around $100. But with that being said, I think we have a question on the chat.
Yeah.
And lastly, lastly is like there's always going to be turbulence. We call it turbulence, but listen, you have a Lepe Tendwell property realtor. They're the pilots, okay? Then you got me as a co-pilot, as your lender. We're going to land that plane. We're going to try to keep it as smooth as possible. There's things I was going to keep up, so be open-minded about that. But you know, nothing out of the scope that we can handle for you, okay? So yeah, go ahead. There's one more question on there, guys.
Yeah, they
How
want
about a
Raul
100-inch TV and a barbecue grill? They want Raul to come and
And-
grill and watch the game. I'm down.
Hey, I'll bring some beer. We get the meat. We bring the grill. Let's go. I
There
like
we
this guy,
go.
Christian. I like
Yeah,
Christian. a
yeah.
lot.
Hey, so I started off by saying, you know, there was three things that we needed to know as buyers before we jump into the market. We went over all three items, and I did say that we'd send a $10 Starbucks gift card to whoever can throw it into the chat first. So I'd love some participation. Whoever can list the three things in the chat first, I'd be more than happy to send them that gift card. While you guys do that, we definitely want to open it up for questions. Any questions that you may have. We do have about a minute or so till 7:30. We don't want to take too much more of your time, but yeah, let's see if anybody has any questions, or if anybody can tell us the three things that we feel are important for you as buyers in today's market to know before you do make that jump.
I hope
Yeah.
that Christian Acosta has the answer. Come on, Christian. You've been
I
listening.
know.
What's up?
And while everybody's brainstorming on or typing your questions, I also wanted to remind you guys of our coming workshops like this. The next one is in 2 Tuesdays away, and it's insurance. I don't know. Sorry, guys. I thought I had left that information open.
Yeah, it's about homeowners insurance, right? And I know insurance can be a very exciting topic. Just kidding. Insurance can a lot of times put us to sleep, right? And that's the last thing that we want to do. Before you buy your house and you meet with your insurance agent and they're just boring you to death with all of these clauses in that contract, we want to tell you kind of what to expect and some things to look for. Just because you have homeowners insurance doesn't mean that you're necessarily covered, right? So there are some important things that when it comes down to getting your homeowners insurance that you need to look out for. Because again, not all insurance is good insurance. So we want to make sure that you are prepared. So when you do start shopping for that homeowners insurance, of course, with the guidance of your favorite Lepe Tendwell agent, and hopefully with the guidance of our next workshop, you will be well prepared. So let's see. Sandy said market knowledge, pre-approval, and I did not get the third one. Shoot, 2 out of 3 close. That was close. That
That's
was
pretty good.
close. Yeah, that was pretty good.
LTM had the last one.
Yeah. It was the or before I blurt it out, I don't know if anybody else is typing.
It's 7:30. We're out of time. What's
7:30
up?
at a time. The last one was timeline. So you want to know your market knowledge is you want to definitely, the second thing is meet with your lender, get your plan. The average person that meets with the lender typically doesn't buy or is not ready to buy within 6 to 12 months after meeting with this lender. So get your plan, meet with your lender. They're free. Alfonso's not going to get mad if you meet with them and you can't buy that day. It's okay.
Oh,
And lastly, have an idea of the timelines. That way you know what to expect, right? So when it comes down to make that deposit, you're ready to go and you're not just like, oh, I already spent that money or whatever it is, right?
yeah.
Yeah, market knowledge, pre-approval, and timeline. There you go.
Too late, bro. Too late. Come on. I will give it to you. I had all my money better on you, Christian. Yeah.
Oh man, I had my faith on all of you guys, but I do appreciate it. So here we got one question. How far in advance should you get your pre-approval? I'm looking to purchase a home in April, May. As I mentioned earlier, a lot of the people that meet with the lender typically are not ready to make that move until 6 months to 12 months out after meeting with your lender. So whether your timeline is 3 months, 1 year, 2 years, meet with your lender. Definitely get connected and get your plan because a lot of times you may be prepping for April and May, but when that time comes, you're ready to make that plunge, you meet with the lender and the lender says, hey, by the way, you got to pay down this car a little bit more or whatever it may be, right? So we want to make sure that when April and May does come, you're ready, Amy. So I recommend that you meet with your lender ASAP. And thank you, Alfonso. Alfonso put his phone number in the chat.
Give us a call. There's my
yeah.
information there, 619-843-0627. The consultations that your Lepe Tendwell property realtor is going to do are free. The consultations that I do are free. You know, I'm not going to get offended if you don't want to buy a house right away. So, you know, just give us a call. We love the opportunity to earn your trust first. So, you know, text us, DM me, email me, whatever it is. I'm here to help you guys out. Lepe Tendwell property agents are here to help you guys out. It's never too early. There's people that don't buy for a year. They just want to know, hey, I could buy. So they wait till the right timing is for them. So give us a call.
100%. I also threw in our Lepe Tendwell office line on there. It's a cell phone, so you can call, text anytime. That way you can reach your favorite Lepe Tendwell agent. Just shoot a text message or give us a call, and all of us are more than happy to help. I think one of our core values, and I think Alfonso shares this with us too, is education, right? We just want to educate and empower everyone that we come across. And by empowering you guys, we're helping you make the best decision for you and your family rather than just going to someone who's trying to tell you what to do, right? So with that being said, we're a little bit over our time. I appreciate you all taking the time to meet with us on this evening. Thank you very much. It means a lot, and I hope you have a great evening.
All right. Thank you, guys.
Thank you.
Bye-bye.
Namaste. Thank you, everyone. Great presentation. Thank you.
Thanks,
Thank you,
Elizar.
Sandy. Let me know your address. I'll send you your card. No, I don't want to log it off. Should we stop the live and then just wait and see? Stop the recording.